It's 11 minutes to the top of the hour. Yahoo has overnight unveiled a $300 million deal to buy a behavioural and targeting company called Blue Lithium. The three-year-old company makes software that will allow Yahoo to track consumer behaviour as users move between websites and should allow the internet giant to convince buyers its ads are reaching the right people. Well, joining us now to discuss the deal and the outlook for Yahoo is the group's European Chief Executive, Toby Koppel. Toby, thank you very much indeed for joining us. Look, I mean, by any benchmark, €300 million or $300 million for a three-year-old company, it sounds a bit expensive. What are they doing that you couldn't do yourselves, and why are you buying this company?
Well, the online advertising market is growing by leaps and bounds in Europe, over 30% across the board. So, great opportunity for us to expand and accelerate our efforts by acquiring Blue Lithium's technology and their network of publishers, which allows us to provide advertisers with the ability to reach audiences both on Yahoo and off Yahoo with a very, very targeted, scientific, data-driven approach to connecting with the audiences that they care about.
So, I mean, what are we talking here? Like, basically, if a user such as myself hits on one kind of site, it will look and try and work out what kind of advertising we want to see, or we could potentially buy from.
If we can see from your behavior across multiple websites that you're looking for a hybrid car, for example, we can then work with hybrid car advertisers to find offers that will be attractive to you, so we can offer you a deal that's it's relevant advertising when you're on a website, as opposed to receiving advertising that's not particularly targeted at you. We actually get you something that's meaningful.
So this kind of level of sophistication is on the increase, clearly, but I mean, what about the broader advertising revenues for the internet sector in what has been a very tricky time in the last couple of months for the stock markets? We know that that does have an effect on some broad advertising, but in terms of internet advertising, is it still growing at pace?
Still growing very fast. If you look across Europe, broadband penetration is still below 50%, so a lot of opportunity for people to get broadband, which means they'll be spending a lot more time online, and they're spending less time with other media such as print or newspapers. So advertisers need to find ways to connect with their audiences online, and what we're offering them is an improved solution with Blue Lithium today. And
can you give us an idea of what Yahoo's growth figures in advertising are at the moment compared with the broader market?
Well, the broader market is growing around, in Europe, around 30%. I think we're actually feel like we're taking share in the market across Europe. We actually have one of the leading sales forces in the market, some of the leading sites. So we feel like we're executing very well in the display market.
So Yahoo's advertising revenues are above the 30% benchmark then?
Yeah, we're taking share.
In terms of the cost of that market share growth, though, clearly we have a stunningly competitive position out there. BT announcing only in the last week they've passed 4 million broadband customers, but I noticed always that pricing is coming down as well. I mean, how are the margins looking on the broadband offering?
Well, for Yahoo, we're in the business of trying to reach consumers, and so the more broadband that's available, the lower price, that's far better for us, because that means people will be coming online, spending much more time online. Our business is about offering great websites and also offering opportunities for advertisers to reach audiences. That's all great for our business.
Now, we were just saying before we went back to on air that Jerry Yang, of course the Chief Executive, has come back in. He's got this 100-day review. Now, how close are we to seeing the results of this review?
I think we're a few weeks away from the end of his sort of 100 days since he took over as Chief Executive, and he's been working on a number of initiatives, and he's announced a number of changes so far, and there's great momentum at the company right now, and we're very excited about the future.
But I mean, presumably at the end of this he will give us the results. Can you give us a sneak preview of anything that you think Jerry's going to be focusing on, where the big changes in strategy are going to be?
I think you see a continuation of our focus on the online advertising market. I think Blue Lithium is a great example of us investing in this market, offering a broad range of services to not only our brand marketers, but also on a performance advertising basis, and which is why we've announced this today.
Toby, Anna Martin has got a question for you.
Toby, good to see you. Just a question really about your company, but more broadly about the tech sector. In the current market turmoil that we've seen over the last month or so, we've seen perhaps some fairly strong performance coming through from the techs, in particular in the United States, and the logic behind that seems to go along the lines of these companies have low debt levels, they therefore are less exposed to all this turmoil in the credit markets, and they also have fairly strong international sales. I just wondered about your thoughts on that, whether that's the case, whether that's something that specifically you think applies to Yahoo, and also more generally, do you think that's a sort of justified reason to be increasing exposure to the technology sector right now?
Well, there's a secular shift going on where people are spending more time online than they are in more traditional media. So on average, people are spending anywhere between 15 and 25%, depending on which country you look at, of their spare leisure time online, and therefore that's great. So advertisers need to reach those audiences. Globally, the percentage of advertising that's online today is under 5%. So great opportunity to move that 5%. They need to reach those people who are spending 20% of their time. So that secular shift is going to continue. We feel good about that. Advertising markets in general are tied to the economy, so there's always going to be an economic factor involved, but we feel like we'll continue to over-index in the growth of the market because of the secular shift.
Toby, we had a board up just now looking at the share price performance of Yahoo compared with the rivals. I think it was Google up there, and there was a big divergence in the performance. Clearly that's alerting some of the brokers now to your company. Bear Stearns recently said it's one of their top picks. They also said that you're an acquisition target, of course, and Microsoft, looking at some of those competitive positions you're talking about and the advantage of gaining more of a foothold. I mean, do you see at some stage in the near future Microsoft making an approach?
I read that in the newspaper this morning as well, and all I can tell you is that we're very focused on executing against what we think is a great opportunity. We've gone through a transition year as a company, and we think a lot of terrific growth opportunities ahead. The display advertising market is growing, as I've mentioned, and we're just continuing to invest in that and offer our advertisers the products they want.
I'll leave you alone on that line of questioning, but in terms of your own acquisitions, I think you were hinting really that Blue Lithium and more type of acquisitions like that could well be the way forward. I mean, have you got another deal in the pipeline?
We're constantly working to improve the kinds of offerings that we offer our advertisers, so we're always looking at building, buying and partnering.
All right, nice to see you today, Toby. Thank you very much indeed for taking all questions. Toby Koppel, Chief Executive of Yahoo Europe. Let's get